All right. And we're back again with Eric Fabian of the Ottawa Mortgage Shop.
How are you?
Good, man. Thanks for coming by.
Oh, thank you for having me.
So, what's going on in the mortgage world?
Well, it's been status quo. I mean, Bank of Canada announced yesterday that they were holding the rate, which wasn't a big shocker. I think everybody saw it coming. Um, we're still going to see some decreases this year. I think our anticipation when we talked last was that the Bank of Canada would make about 0.75 decreases from May to the new year. I think now we're in a similar situation. I think we're just delayed. Okay, so now you might see 25 to 50 basis points this year, and then a little bit more in the new year. I think everything is just getting pushed back a little bit, seeing what the numbers are showing for the Canadian economy. Okay, so if you're looking at what you're seeing in rates right now on the variable term, I mean, if you're getting 1% below prime, you're at 3.95. Okay, if you're getting a little less than that, you're in the high or the low fours, which is still very decent. If we anticipate another 25 basis points to 50 basis points this year, we're going to be hovering around the 3.7, 3.75, so 3.8%. So the place where we thought we would be last year in rates sort of showed up a little bit in May, June, or April, May, where we see the lowest fixed terms. And now it's gone up a little bit. But basically, where we anticipated to see the new rates being hovering around the 3.7, 3.8 is not far away. We saw it a little bit, like I said, April, May, but we're not far off from that. The main factors on why the Bank of Canada decided not to make a move are the numbers that came out. So inflation comes out at 1.9, which is slightly higher than what it was at 1.7. Okay, the main reason for the little increase was the energy levels that really took the inflation not to go up as much. Cost of goods, foods, everything is up by 2.9%. Okay, what kept it down was the energy, the fuel, the gas prices. That's what really kept it down. So when we're looking at the inflation numbers, it's sort of fictional a little bit because we know the gas prices are up and down. So if the gas prices go up, the energy level goes up, then you're going to see the inflation move up quite quickly to a 2.4, 2.3, something along those lines, where now the Bank of Canada will have a deeper look as to what the upcoming discounts are going to come from the rates, right? Just right now, when you're looking at the Canadian economy, we know the inflation is not 1.9%. It's delayed, which is the reason for the delay in rate cuts. Okay. The other one that they're looking at is the unemployment, right? So look at the unemployment. It went down by 0.01% from previous month, which we know that job cuts are coming, right? So when we're looking at why the number went down is that they created 80,000 new jobs in Canada last month.
Okay.
If you deep dive into that, 70,000 of those jobs are part-time jobs. Okay, so are these part-time jobs? Yeah, it's great on paper. It's great on paper. Are these part-time jobs going to create a stir in the economy? Not really. Okay, so we know that there's job cuts coming. The tariffs are telling us that there's going to be industries that are going to be hurting. So we're going to see. So again, that number is going to be jumping up, making it inevitable for the Bank of Canada to make a move to do rate cuts. when you're looking at the global economy, the GDP, the cost of goods, it hasn't moved. Like it's been steady, but we know with the tariffs that it's going down. So when the governor of the Bank of Canada decides I'm not doing anything now, he knows he's going to have to do it, but why do it now?
Yeah.
Right now, the numbers are showing that I don't have to do it. And, Bank of Canada is always, you could always say that they're late to the game or they're, but they're following the trends and they're making a reaction once the numbers hit, right? So it's just a matter of time before those numbers hit that we're going to see higher unemployment, higher inflation, and rate cuts coming. It's just inevitable. Right now, I think they're holding because nothing is gone on the side of Canada when it comes down to tariffs. So the unknown is making the Bank of Canada just pause and say, let's wait and see what goes on. Is there going to be a deal made? If not, how much are going to be the tariffs? How much are we going to be affected? Because if he decides to cut yesterday by 25 basis points, it does what? Nothing really, right? So there's no point in him or the Bank of Canada, making a move now when the numbers are not showing that the economy is on a decrease.
Yeah.
Don't forget that the federal government is also showing that they're going to be a deficit of $92 billion. Okay, so is it 92 billion or 92 trillion? I think it's billion. But anyways, a lot of spending. What's going to happen to the inflation? That's going to go up. So a lot of unknowns that is going to be happening until we actually see the numbers falling. But those three indicators show you that there's going to be rate cuts. How many and when is going to dictate how fast they can get a deal done with the United States and how the actual numbers will reflect in unemployment and inflation at a certain point in time. So gas prices, fuel, energy, not saving the inflation to go up that much, and unemployment when it comes down to job cuts.
Because when we're talking about rate cuts and actually thinking about like who that benefits, right? Obviously, we're looking at first-time home buyer benefiting for rate cut, but obviously, if the rate cuts are happening because people don't have jobs and inflation is out of control and all that type of stuff, it's an issue. I know a big one is all the refinances that people are going to have to go through. People who got mortgages in 2021, beginning of 22, it's all coming in here. So what are you seeing from that side of things right now with people who are already having to go through that? And I guess the positive for anyone who's got that coming soon, hopefully they're going to get the benefit of the rate cuts by the time. I get calls all the time. My mortgage is up in November, my mortgage is up in December, my mortgage is up next January, right? People looking to sell for those reasons, but on my side of things too, we're also seeing the inventory increase quite drastically, and so the sales are becoming a lot harder, which is going to bounce people back into the remortgaging, and the rates are going to play a big part of that for sure.
80% of the mortgages coming up for renewal in 2025, 2026. 60% of that is 2026. So we've seen an increase in refinances and mortgage transfers. The existing lenders for the people that are renewing are being still quite aggressive to help these clients maintain not too much of an increase on their monthly payments. Either they, lower the rate a little bit for them, or they put it on 30 years, or they create a higher amortization for a short-term period to balance out the mortgage payments. Where we're seeing a lot of difficulties is more on the B lending, private lending, because the interest rates are so high that not so high, but they're high, where the client wants to refinance or transfer, but now the problem is the value is lower and the mortgage amount is not coming up to the 80% loan to value that you need. So you can't refinance. That's where the trouble sort of comes. On the regular A lending, I think we're not going to see too much traction with it. People hopefully have been bracing, knowing that it's going to be coming up. But there are ways that you can sort of move that needle to make it less painful for everybody on a short term. But on the private and B lending side, that's sort of what we're seeing is there is no money to go get for refinancing anything. So a sale is probably the best option for these types of clients, and hopefully they come out with some money in their pocket.
Yeah, I mean, in Ottawa, we're definitely affected by it, but much less so than what I see coming out of the GTA. Are you hearing any horror stories out of the GTA right now with people trying to renew or anything like that?
Not on the renewing side. Mostly the biggest thing that we hear is on the new build condos, especially where people are just walking away.
Yeah.
They purchased 3 years ago, and now the appraisal value comes back as much lower than what they paid for. They put a $50,000 deposit, but if they were to take this, the purchase price went down more than 50,000. So for them, they just walk away. And these are very small condos, and you're going to see. That's more of what we're seeing, less so of the refinance problem or the mortgage transfer problem. Is more of people walking away from builder deals, mainly condos.
Yeah, it makes a lot of sense to me.
And like CMHC came out with a report for newly built homes, and again, the government are telling you we're going to build homes, but they're actually on a huge decrease when it comes down to the amount of homes that are going to be built from now to 2028. And it's just a line that keeps going down. So the amount of homes that are being built or anticipated to be built right now, if nothing, comes out of the government helping, build homes, is going to be a decrease, right?
I think significantly in the single family sector too, right? Because I think it doesn't make sense.
Yep.
With what the cost to build and what the resale prices are. But I think we are seeing an uptick in like the multi-res side of things.
100%.
But then again, dealing with cities like Ottawa, like it's still a lot of red tape.
Yep.
The rezonings, we've been waiting for them. They haven't happened yet in a lot of places. So
There's
there's a lot of people that are very there's a lot of people very stalled on these types of things, trying to make affordable housing. But the red tape of the cities is quite difficult.
100%. Back, if you look back, 4 or 5 years, building a home, you could build a home for, $250 a square foot, right? Now you're at $450, maybe $5, depending on the finishes that you put on this house. So there's a drastic difference when it comes down to building. So, it comes with the cost of lumber, labor, everything that went up during the COVID time. But now, for people to make an investment, buy a lot, and build on the property, you're breaking even, like for the value of the home that you're getting. So it's sort of not interesting for a lot of people that are doing investments like that, where they're buying lots and building, or buying a rundown home, tearing it down and building. I mean, is there cash in there? Not much. If you're doing all the work, like if you're hiring a general contractor, he's going to cost you $150,000 to $200,000 just to build that house and figure it all out. By the time that ends up, like, you're out of money, right? So you're seeing that end. I'm surprised a little bit too as to the anticipation of investors coming back into the market, and I think we thought that it was going to be an increase in that department, where investment, multi-units or townhomes or homes that are being purchased just to rent, those people would come back into the market, seeing that the interest rates are coming lower, and now you're able to sort of recoup your mortgage payments with the rental price that you're getting. So that didn't happen, right? Is there a threat to see that the rental prices are going to be coming down?
Yeah, I mean that's the question, right? Like I'm seeing actually right now we've had good action on some of our income properties, so that's good. I was with the way the market's going, most of the listings are pretty slow. So I was actually intrigued to see in the last month that we saw some income properties get some good action on them. So that's encouraging. But yeah, for sure, I guess that's the question of, yeah, okay, we have the rates better, we have the rental market, the rent increases are higher, but are people going to be concerned with tenants' ability to pay rent, right? And we definitely see that as well. We see people call us say, I want to sell my rental property because I have tenants that are not paying rent. We also have multiple income properties we've sold where the tenants have refused to leave. So I mean that's a whole other can of worms.
Yeah, of course.
That you don't
Well,
need to get into
that's
right
the
now.
risk
But
at one point that you take, but there is not really a secure measure for home buyers when that type of situation happens, and the backlog with the city on getting those people out is like years, right?
yeah, and people know it, and you have people taking advantage of it, and essentially extorting
Of course,
homeowners.
of course,
Yeah.
of course.
What we're looking at on the screen here.
So, 5-year government bond market, and this is a great tool that we use in order to see what the trends of the fixed rate is going to be. Okay, so right now we're hovering around the 3%. I want to show you a nice little graph here, and let's do 3 months. Okay, so we've been sort of on an uptick when it comes down to the fixed term. Okay, now we were hovering around the 2.9s for a while, right about this area here. Where you see the big drop, I'll put it 6 months here so we can see where it actually dropped, which is going to be right here. Okay, this is the lowest that we've seen in 3 years, 2.46%, which means to everybody that's out there, usually, 1.5% above this rate is what you're going to see rate wise when you're putting less than 20% as a down payment. 2% above this rate is what you would see when you were putting, I don't know, 1.5, that's 4. Yeah, so 1% above this rate is less than 20%. 1.5% is what you would see when you're putting 20%, give or take. Now, it's up to the lender's discretion on how much profit they want to make on a certain rate. And usually during the springtime, they sort of lower it a little bit more, take away the margin, but increase the numbers. So for you as a realtor, if you're looking at the numbers that you had, your best months, and I'm just spitballing here just by looking at this, your best months were May, June this year. That's what it was. Beginning of the year, maybe better than previous year, but I think the numbers of how many homes are sold were very good during that time. And now you're seeing sort of a slight slowdown when it comes down to here. But again, it's not totally concerning to or totally related to the rate, because during this time anyways, it's always a little bit
Well, yeah,
slower in the market. So I don't want to say that now it's slow because of the rate, but I just wanted to show that during the time where it was at its lower, you could get 3.79, 3.89%, which is the number that we were looking for. So we got a little bit of push there. A lot of people that got pre-approved at those numbers are pre-approved for 120 days. Now, is there going to be a spike in the market in the coming months? Everybody that's on the pre-approval there that they still have that rate are good for 120 days.
yeah. So they got like a month left.
Yeah, so you might have a little bit of people making moves in order to save on the interest rate. But I mean, if you don't find something that you like, or you can't sell your home, it's not going to happen, right? But
For sure. That's the one positive, because before that I was gonna say like it's a bit of a perfect storm because we are definitely seeing inventory up significantly. Not in all types of homes in all areas, but in the overall macro market of the auto real estate, there's a lot more homes for sale when you pair that up with August, July, August being typically a little bit slower. You have a lot of buyers on vacation. Pair that up with the actual rates being higher. I do expect that we're going to have to see a movement in the average price of homes,
Yep.
right? Like right now, I expect that we will definitely see the average price come down because right now the average price has held with less sales, more inventory, and now interest rates coming up a little bit. Something's got to give.
It's just a matter of time at this point, I think. But with lower house prices, or is that going to spike the market? So if you're looking at what happened last year, we're sort of seeing similar numbers. On my end, I'm not sure on your end, but it was a decent spring. It wasn't a crazy spring. It was a decent spring, but September, October, November were through the roof when it comes down to
You just kick back, yeah.
compared to previous years during those months, right? So is it going to be the same this year? We'll have to wait and find out. But
I'm expecting that. Yeah, like you definitely hit the nail on the head right there. Because I'm expecting that we're going to see prices come down. I think we're going to have to. But when that happens, it just spikes all the buyer demand back again, right?
Right.
All the buyers on the sidelines looking at the list prices, saying the prices are too high. When they start to see the sale prices being different from the list prices, they come back to the market, and then it all starts all over again. Because at the same time, too, the high inventory that causes prices to come down because there's sellers competing with each other. The only thing they can do is come down in price. A lot of them decide, well, I'm clearly not getting my price. I'm not going to sell anymore.
exactly.
Right? And then it's all cyclical. It all moves.
Yep.
But definitely we're at the point right now where I'm looking at it and I'm seeing the activity on listings. I mean, some listings great. Like we're surprised by them. They're still selling in a day, getting tons of action. But the vast majority, quite slow.
Yeah, I think it comes down to certain neighborhoods are doing well, certain price points are doing well, and everything above that price point is just more difficult, right?
Yeah, but you know what? Even this year, I found a little bit different. Normally, the entry level price point always hot no matter what the market is because everyone is fighting over for that low approval rating and whatnot. Where I'm finding this year we are seeing those a little bit slower. I think probably just the increase of inventory of options right now, and I find that the homes that are more desirable, right, with specialties or that kind of stuff I think that's why prices have held. Because I think when you look at the average price, I think the average price is high because the higher priced homes that get the right demand are getting their value for them, right? There's still buyers with money in that context, but I think a lot of the entry level, which is usually like the hottest, I think that's taken the biggest hit from. I mean, this is anecdotally like from what I'm seeing.
Yeah.
But it's like the townhomes, the entry level condos, like those ones that are always hot are actually we find to be some of the slowest, and it's like the higher end singles that typically take longer to sell are getting more action, and that kind of stuff. Yeah, it's interesting.
Yeah, it's going to be interesting to see how September, October, and November plays out. And, again, going back to my initial thoughts here, job uncertainty might play a role in that, depending on when the cuts are coming and in what sector they're coming, right? We're a heavy government town. So if the federal government states that they're going to cut, 150,000 government jobs, like that's a good 75% of those people in Ottawa.
Yeah.
So that might play a factor too. But yeah, we'll. It's tough to say right now what the outcome is going to be. But we can only look at what the numbers were in the past, right?
For sure.
And sort of make our predictions from there. But I see, like I said, a little bit of last year into this year, and I'm anticipating a little boost when it comes down to September, October, November.
Yeah, I'm the same for sure. Like basically, this is the conversation that I'm having with my sellers right now. By the time we're shooting this is July 31st, right? So I'm basically looking at most of my sellers and I'm saying, you have two options. You weather the storm. You expect that, you're not going to see much change here in August. You expect to just kind of be sitting here. Obviously, we're going to keep marketing them. We're going to try and find that right buyer.
Yeah.
Right. If we get a sale, amazing.
Yeah.
Right. It's not, it's planned for the worst, hope for the best.
Yeah.
Right. But it's like, you pretty much right now, we're hoping to sell in September when the market comes back.
Yeah.
Right. And if we sell in August, great. Or if you are trying to get this done sooner than later, you got to drop the price.
Mm-hmm.
It's one or the other. It's either weather the storm, and that's kind of your own philosophy on, where you are and what your nerves are,
Yeah.
really, right? Like, how well you handle stress and that kind of stuff, right? But that's we see open houses come back too. We're doing more open houses. We're getting we're getting more buyers through open houses right now than we are getting private showings.
Yeah.
But we market everything. We do whatever we can to get exposure. But the thing is, if the buyers aren't there, the buyers aren't there.
Yeah, that's right.
Right? If they're at the cottage, they're at the cottage.
Yeah. That's what it is.
And so, that's pretty much what it is. It's really like, okay, you either expect that we're holding on till the fall, and taking advantage of that fall market, which I expect as well to be better, or you gotta kind of make any move that you can to get yourself exposure. Because the thing is, if you don't do it, someone else is going to do it.
Yeah.
The people who are going to sell in August, people who are going to sell in the next month, are the people who are dropping their price.
Yeah.
To stand out of the competition. It's there's two sides to it, right? It's like, I know we're talking about mortgages, but I'm just going to go off on a little rant now,
Well,
right?
that's what it is, right?
Looking at it, it's like, there's two ways of looking at it. It's like, one, you have to price your home for value, right? If there's upgrades that you have, or there's something about your house that you have above someone else, then for sure, right? You need to be able to negotiate the value. You need to be able to market that value and get that value. But at the same time, too, anything that you're priced above the competition is advertising for them, right? Your advertising is why that the buyers should buy their house instead of yours.
Yeah.
So it's a really fine line of getting the value for your home without actually shooting yourself in the foot and advertising for the competition by being priced out of the buyer's budget.
Yeah, and funny that you mentioned the cottage, because in the summertime. But I've look at the cottage market now. They're not selling. It's not even close to being sold. And just on my lake alone, we've got about 15 that are for sale. Where 3 years ago you couldn't even find one, not one, and they were selling for higher. Now you've got cottages, a 2-bedroom for $350,000, which was never seen in the past 5 years. So other signs of the economy slowing down and coming down a little bit is when you're looking at you could look at the cottages, you could look at the trailers or campers, you could look at boats, you could look at all these luxury things that were purchased during COVID, because one, you were locked down, you couldn't do anything, so everybody is trying to adapt and mind shift to something else. Now when it's becoming the tougher times, or you're going to be refinancing your property and having an extra $400 payment, well, now all of a sudden that boat is bye-bye, and that trailer is bye-bye, and now we can't afford the cottage anymore. So obviously, your home is going to be the last resort of, selling because of financial issues, but everything else that you see now are going at a rapid rate. So,
you might not know the answer to this, but it just comes to mind when I'm looking at cottage inventory being increased, because, it's something I should know, but not something I specialize in, right? I'm mostly in the city here. But do you have any kind of feeling, I guess, if not data, but like how many of those cottages were possibly purchased as Airbnb or sort of short-term rentals versus are they secondary, like homes that people are just, they just can't afford to keep anymore? Like I'm curious, because I know that was really big for my side of things.
Of course.
Like when the market went crazy like that, like I had so many investors calling me, looking to purchase cottages for the sole purpose of, Airbnb, VRBO, short-term rental, that kind of stuff, right? And I'm just curious of where that market is, right? Because obviously when people have less money to spend, they have less money to vacation at other people's homes.
Yeah.
And I'm just curious.
So I can only speak of what I know, which is my lake.
Yeah.
And most of the properties that are being sold there have nothing to do with the Airbnb model. I think the Airbnb model on cottages is still strong. Like you're still booking, summers in advance. I have a few friends with cottages as investment properties, and they're booked till 2027. And I think that's mainly part of nobody's going to the States anymore.
Yeah, fair enough.
We're staying within Canada and spending our money in Canada. A lot of people go in Europe. A lot of people, on my Facebook, Instagram, they're all in Italy and everywhere else. But a lot of people staying and renting these cottages. So,
that makes sense.
Will there be a factor of that, down the line? We'll see that. But I think it's mainly, finances where you can't afford it anymore and you got to make a move. Or older generations holding cottages, and now they want to move closer to a hospital or whatever the case is. And I think that's more of the way. But
fair enough. Yeah. No, that makes sense to me. I mean, it's good to know that market is still holding on. I just haven't been in touch with that in a little bit. So
no, it's still a good market. I mean, if you're only renting a cottage for almost, I'm going to say 6 months, but it's less than 6 months.
Yeah.
So you need to be able to cover on that 6 months for the entire year of your mortgage payments, property taxes, and whatever else that you have on there. So is it profitable?
More profitable than someone who's not renting it at all, I guess, right? Because even then, a normal cottage, you're still only enjoying it yourself.
Yep, 100%.
And eating the bill for the rest of the year.
100%.
Yeah.
So that's what we're seeing in the rates. So again, anticipation of what we're going to be seeing in September, October, November. Bank of Canada announcement in September, so we'll have a good indication of where that goes, and I think we're going to have a great indication of the true numbers coming out. Not fully, but true numbers coming out, right? And when you're looking at government that are technically not working in the summertime. So for them to make drastic decisions, I don't think there's going to be any moves within that time period. I think their main focus is to, get a deal with the United States and figure out the tariff situation. So that's going to be the big implication and seeing what's going to happen there.
Yeah. What about anything interesting happen with you lately? Any clients have some good stories or maybe some
happened? Great question. This happens quite often, where I have a client, and this was a stressful one. It came to me. I was the third broker involved. Okay, on this situation, the first broker. And a broker, it's actually an institution, not a broker. They didn't pre-approve them; they pre-qualified. Okay, so to give you the backstory, these clients have a home. Okay, married, 4 kids. They get pre-qualified from the bank or a credit union, and they sell their home. They move out of the home. They move into a family member's, and now this credit union says doesn't work.
Oh, jeez.
Okay. When I got the deal, it was 9 days before closing.
So they purchased the home as well. So
they purchased a home, and for me, it's more helping these people, right? Like 4 kids living in somebody else's house.
Yeah.
Where are you going to go?
For sure.
Where are you going to go, right? The file went to another broker. Broker's not getting back to them, obviously, because it's not working. And then the file, comes on my desk. And then, the types of files that I enjoy working on, it's not a ideal situation, but I enjoy trying to figure out a way, problem solving, as opposed to like 2 government workers, 20% down. Like it's kind of
Submit
easy.
paperwork.
Everybody can just
Yeah.
do those ones, but it's those nitty gritty ones that you really feel for, and that you really want to do everything in your power to help these people out. And we were able to figure out a way by them paying a few small debts, restructuring the deal with income, being able to get more income out of the income that they were making, and making the deal happen, and being able to close in 9 days. I mean, it's like you don't see that.
Yeah.
You don't see that, right?
Yeah, no.
And it's like, and I got to give it to the lender that we went with, where we're having conversations on the phone, detailed notes onto how I came up with the income that we used, calling them, going through everything, so everything is clear to them. Because an underwriter, if you just throw the file in, they don't know the client, they haven't spoken to the client, they just see what's on paper, right? And they're going to be like, how you came up with this number, what, this doesn't make sense, and they're just going to be like, no.
Yeah.
Right? But when you talk it out, when you explain the reasoning behind everything, and it makes sense, and we had to go to the mortgage insurer on top of that for that to make sense as well, and for them to approve it, and it all worked out in the end.
Awesome. Good story there.
I'd rather have deals that I have 30 days to do.
Yeah, of course.
9 days is a stretch, but just a perfect example of don't get pre-qualified, get pre-approved.
Yeah.
Okay? Credit is looked at. Credit scores are looked at. Your debt load is looked at. A pre-qualification, you input everything. You input your income. Okay? So
And if you're wrong, yeah.
if you're wrong, right? Yeah. Everybody's going to put what they made last year. But if you're self-employed, it's an average of 2 years. It doesn't work, right? So if you made 78,000 last year, but the year before you made 40, it's not 78. But you in your pre-qualification put 78, right? The amount of debts, right?
Yeah.
Oh, I've got this, but like, oh man,
People
I forgot
forget,
that
yeah.
one, right? Always,
sure.
always. It always happens. So get pre-qualified, get it on paper, and make sure that you get an approval before you do anything drastic like selling your home.
100%. Think that's good advice?
Yeah. And the last thing I want to talk about is, something that's not talked about enough, or a lot, sorry, is the stress test. Remember that thing? So stress test, and I know everybody's familiar with it, came out with, qualifying a client for a mortgage that you have to use 2% above the rate that they were getting, or 5.25, whichever one was the highest. Okay? OPSI has said that January, February, they're going to be reviewing the stress test to see if there's any changes to be done. Now, this is all speculation on if or what is going to happen. Nobody knows, and nobody knows if they're going to do anything on it, but they're going to have a look at it, which is, I think it's going to be good. I think they're going to find something and change something to benefit first-time home buyers, maybe only, or everybody. I'm not sure. But when I started working at the bank, there was no stress test. There was only a stress test, and the stress test wasn't a lot. There was only a stress test if you took a variable term, a 1 year, 2 year, 3 year, or 4 year. But if you took a 5 year fixed, you would use the rate that was given, no stress test, in order for them to qualify. Now, bringing this back, knowing that right now we're sort of we're there, bringing that back will help people get into the market a lot more. Now that they gave you 30 years, easing the stress test, limiting the amount of risk that it is when you are just, it's a 5 year fixed, right?
Yeah.
They might even switch it up completely, and instead of 5 years, they can go to 7 or 10, right?
Yeah.
You do 7 years, and here's the rate, and there's no stress test. That might spark the market as well. So that something like that is what I'd like to see. Keeping the lower terms and the variable term with a stress test, but giving rate options with no stress test in order for people to afford a little bit more. And when you're looking at the 2%, depending on what the purchase price is, that's like 75 grand
Yeah.
on certain aspects, right?
Yeah, for sure.
So from somebody who's looking at something at 500, at 575, you're totally in a different bracket. Now you're able to you get something that's more, family friendly, if you have kids or whatever the case, you're not stuck in a small condo, right? So yeah, it's going to be interesting to see. So changes may be coming on the stress test aspect. So not sure what. This is all speculation for me. I just know what it was when I worked at the bank, which I found was great at the time.
Yeah.
And still think it's great. I understand why the stress test, especially when rates went down to 1.69, 1.49.
Yeah.
So being able to qualify them at 5.25, that's why we're sort of
Saved
not seeing a big, a drastic effect on foreclosure and all that stuff so Canada made the right decision in order to save the real estate market, not like the crash of 2008, right? So being able to have that is great, but I think it is time for a review to see if something can be done on that front.
Yeah.
And maybe now, like if they do change it and they don't do the 5 year, 7 year, or 10 year, whatever, now maybe the 7 year is going to become the more popular rate, which we haven't seen in.
Yeah, makes sense. I'd be interested to see that happen for sure.
So yeah, so those are the things to look out for. Apart from that, yeah, that's the mortgage trends as of today, July 31st.
Yeah, it's good, man. Thank you. Always good catch up, man. It got my mind going on what could happen for sure. We don't know. There's a lot of things that could happen.
That's right. Thanks.
All right.